I wanted to start broad with you. If we have a Joe Biden White House, how does that change how you look at your business?
Hi, Alex. Thanks for having me. The LNG business is actually strengthening fundamentals. We saw probably a low from the impacts of COVID in June, and we're recovering going into the fall and into next year. The fundamentals of LNG for the long term are very, very strong, and in fact, highlighted even more the importance of clean air on a worldwide basis from the respiratory concerns of COVID. So we expect to see 25% growth in the LNG market by 2025, and in fact to double LNG by 2040 on a worldwide basis.
What is that doing for your business? I mean, signing deals, long-term deals, investment is like the lifeblood for you guys, so you can get the cash to then build out your export facility. Where are you on that?
Yeah, Alex, as you would expect, the energy market went through an extreme time of pressure this year. So long-term negotiations and contracting are going to be happening again as we pass through the winter months. We need to see some pretty strong recovery going into the winter. All the early indicators are that we're set up for that. We have now China and India, still a massive force for growth in the market. The Chinese market is up 8% year over year. Indian market up 21% year over year. So we go into the winter with some pretty strong fundamentals that are going to support long-term contracting in early 2021.
So I'm glad you brought up India. You had signed a Petronet MOU earlier in 2019 that didn't wind up resulting in any kind of deal. The company's CEO in a conference on Tuesday said that they're kind of more keen on securing cheaper prices on the spot market than long-term deals. Does that mean that any sort of deal with them is like 100% off the table right now?
No, in fact, Alex, it's going to be so important as we watch Asian energy prices. We had, a low probably in Asian LNG market of $2 an MMBTU. That's already been strengthening, and we see the winter prices now over $5 an MMBTU. $5 is a really, really important catalyst because we will deliver LNG into Asia at $5. So as the market recovers over that price point, there's a return on equity that supports those investment decisions. And as we get through what's really going to be a very, very tight supply year in 2021, we expect to see LNG prices back in the normal trading range over $7.
And is the tight supply due to, say, oil production shutting down in the U.S., so you have less associated gas, or are there other reasons for why we're going to see tighter supply or demand?
Actually, we would have had 2021 a very tight supply year anyway, really more driven by the pace of infrastructure and how liquefaction plants, the supply plants for liquefied natural gas, are very, very long construction period, as I know you know very well. And so 2021 is simply a low year of new liquefaction capacity.
So does that mean that you feel, well, I guess a better question to ask is, you're going to begin construction in 2023 to deliver your first LNG site. Do you still feel confident, or what's your level of confidence then in that, based on the fundamentals you just laid out?
High confidence, Alex, that we start construction in 2021. That does mean that our first deliveries are going to be 2024. And that's the fastest that we can bring new LNG into the market, either from the Driftwood LNG terminal or, frankly, anyone who is going to start construction in the next 12 months is a supply increase in 2024, 2025. So we're going to endure a period of new supply starvation in LNG over the next 5 years as some new plants come on, but only at a rate of probably about 2 or 3%. And that's going to be a pretty dramatic change, as we've been able to support market growth in LNG for the last 5 years at a rate of more like 9 or 10%. So that, disconnect is going to create that market tightness that you mentioned.
So that means that we won't wind up with too much export capacity. So if that's the case, is it pushed out, or is it kind of dead altogether?
Definitely not dead. We desperately need more export capacity. In fact, we need probably another 100 million tons, which is roughly 25% of what the market size is today in new liquefaction capacity, and we need that to start construction in the next 12 to 24 months.
In terms of India, as we ran out the conversation, sort of talking about that supply and demand dynamic, are you still in talks with Petronet, and/or are you talking to any other customers in Asia right now?
So definitely still in talks with Petronet, and of course with all the buyers in Asia, as you would expect. The Indian market is actually so exciting because they are spending $100 billion on distribution infrastructure in country. And so even over the last 6 months, they've really opened the city gates wide open. The Kochi terminal is operating. And so a lot of debottlenecking that had to happen in the Indian market has put them on pace to, frankly, double their LNG exports and potentially become one of the largest 2 LNG importers as we cross into 2025.